welcome to our Hive Founders COVID Action Table, Roundtable. It has many different names, but that's what it's called. And welcome to our new format, which we hope will be able to fit around your schedule as opposed to trying to get you to fit around our schedule. We know that right now, it's besides being a really difficult time for everybody, it's even more difficult now to actually carve out a time to pay attention to any one webinar or seminar, especially online when you have to pay attention. And so what we decided to do was to change the format to a more intimate fireside chat between the founder of Hive, which is Felicia Myrovitz-Singh of Oconee Hub, and our guest speaker. So we're very, very lucky that today we've got Andrea Reynolds, who is the CEO of SwoopFunding, and a one-liner on Andrea. Basically, she started off in KPMG and joined a management consultancy division, et cetera, went on. You did that for 10 years, right, Andrea?
Yes, and then went on and set up my own corporate finance house. And then it was at that point realized how difficult it was for young businesses and SMEs to navigate the landscape. So decided to bring it all into one platform, make it easy.
Excellent. Okay. So I'm just going to give a real brief introduction. Danica and I are going to switch off asking you and Felicia questions. You can have a discussion between yourselves. And then we're going to make this available to all of our subscribers and funders and our supporters and our wider network online. So that way it's kind of like you can access it anytime you like. Okay. All right. So first of all, Andrea, thank you very much and welcome.
Thank you for having me.
Always good to be the first, right? It's, and that's a good introduction to our discussion right now. So before we get any further, it would be great if you could just describe for us what SwoopFunding is, why you started it, and just tell us a little bit about it.
Yeah, sure. So SwoopFunding is a place where you can raise money and also reduce your costs and therefore save money. The point of Swoop was, as I just mentioned, I was in corporate finance. I was looking after a lot of innovative businesses who required more than just one form of funding. So they required grants in their early days of innovation, needed to go and raise some investment for them, and then looking at loan finance when they needed to manufacture equipment, etc. Realized that it was a really time intensive, confusing and turgid process for any business owner to have to go through that. And for me, it was like business owners need to be focusing on sales and their hiring and doing all of that. Why do we make it so hard for them? And realizing that your data is your data. You just have to reconfigure it and present it in a particular way for these different decision makers. So of course, technology had moved on, and it was easy to take from my brain, I want to scale corporate finance in a way that business owners could access it for free rather than having to pay crazy fees. And so a business can come on and integrate all their data sources, so cloud accounting, online banking through open banking. We collect information from Companies House and other publicly available information, and we pull the data from your different sources and build your profile in the way that we can then match it to funding providers' criteria. So what we're doing is taking this huge market that exists and literally curating it down to the 3 to 5 products that you are absolutely eligible for. And then we speed you through the application management process. The reason we know Felicia and Oconee is because at all stages, we're looking at how can we improve our business's bottom line. And small and medium businesses are the most underserved customer group and the most overcharged. And so we started looking at ways that we could improve bottom line across utility savings, banking, international payments. And one of the key areas is the number of businesses that have have cash reserves sitting in current accounts or in just a second account within their banks, and realizing, oh my God, these guys don't understand that because we don't have treasury functions in our businesses. We are everything. So the point was then coming together with a Coney to be able to share this with our customer base as well, and help them at every single stage to improve those numbers. So that's what we do, and that's how Felicia and I met.
Okay, thank you. So just to back up for a minute, just want to also explain to any of our viewers that are not familiar with the Hive Founders. The Hive Founders is a dedicated network for female entrepreneurs. And basically what we do is we give tools and skills to skill up women. So it just in line exactly with what you're talking about is to prepare themselves for the growth of their business at some particular exponential level. Yeah. And it's really interesting hearing you. And I'm really sorry because that we have to do things this way. The whole world is sorry. But originally this was actually supposed to be a really great event, which we were going to host in conjunction with PwC together with their Raise platform. You were going to be the guest speaker. So now you've got a captive audience of millions as opposed to 40 or 50. How's that? Okay. I would love to now get into some of the real questions that we've got, specifically on the topic of today's session, which is cash flow preservation. Yeah. And, you know, just to put a little bit of a side on this, it's the interest that a lot of our female entrepreneurs will have is that's great if you've got cash flow yeah, to start with, and then you have to learn how to preserve it. Okay, but the question is, what about some of these newer firms? A lot of our entrepreneurs and a lot of our female founders are actually either at the R&D stage or pre-seed or seed, but definitely not, you know, we only have a handful really who are at Series A and B. Yeah. And if you kind of look at the larger market, it's actually reflective of what's going on. It's a sort of microcosm of what's going on, is that we don't, and Felicia and I noticed this at the Paris FinTech Forum, that there are very, very, very few women, female founders are already in Series B or making over, let's say, you know, profit margin of a particular level. So, you know, if we could take that back, it would be great to hear about your view on the newer firms.
Absolutely. So if you are at that very early stage, you may be pre-revenue, you may be sort of 6 months into, I have an idea and I've set up my company, and you're hearing about all these schemes that are being announced by the government. You're thinking, which one do I fit into? And you're like, oh God, it's not that one. It's not that one. It can be quite depressing if you're in the super early stages. So first things first, you can absolutely and still are eligible for a startup loan. I started my business on a startup loan. You can get one for each founder or each promoter of the business, and you can raise up to £25,000 under that approach. What's really nice about it, and why I went for it myself, was it's like a 6% APR. So it's like your first loan where you're not going to get an absolute killer interest rate, and you can get capital repayments for the first 6 months. So what you can use it for is that time of, you know, your MVP or your prototype or your website or whatever it is, to prove the point that you've gotten it from, you know, my idea into something that you can share with an investor community. The good news is, because of what's going on at the moment, they actually have a version called the second loan. So you start your startup loan and you go a few months into that and you prove yourself and you prove that you are responsible and pay back your credit. Then you can actually go for another extension of the loan and get a further 25. So that's one way. Second thing to know is, if you're in R&D mode, you can, and maybe your financial year ends a little bit later in the year, you can actually shorten your financial year end, get your corporate tax return in, and most likely you have an R&D claim going alongside that, where you're looking for a refund. So you can put your claim in earlier, and that's a significant way of how we save a lot of businesses in the super early stages who are maybe waiting for their first investment round in SEIS or whatever. Get your claim in. Now, it used to be HMRC would pay you within like 8 weeks or something. Not anymore. This was pre-COVID. It's Brexit related. A lot of the team are gone. So it's gone out to like 6 to 9 months, but we have lenders on our platform who noticed this trend and created a product specifically around advancing working capital facilities on the back of your R&D claim. So those are the kind of typical places that you start as a business when you're looking for. I always say the early days are like a patchwork quilt. You're literally like startup loan, or indeed tax credit, probably a bit of your own money, probably some family and friends, get your first seed enterprise investment scheme, 100,000 or whatever it is. And it becomes a little bit like that until you get to the point where you've proven a bit of market validation to get you into the real levels of raising 500,000 or whatever it is for your first round. So that's how you play the game.
So that's really interesting, actually, because I've been a fundraiser for over 20 years. And one of the really difficult things about fundraising is that people can't get their head around the fact that they could be a fundraiser, they could sell something. And what these startup loans are doing effectively is really kind of easing you into the process so that eventually you kind of like really believe in your own product. And that, if anybody asks me what is the secret about fundraising, that is the secret, is that you have to really believe in your product so much that people will believe you, because they are buying the founder. And, you know, women are very expressive. We're great at this. And so there's lots of reasons for us to succeed, but particularly with these early loans, you know, to give us the confidence, really, to give women the confidence who have never started a company before. And to kind of, you know, go into the process, and then, you know, to get one and then to get another, and then just get your head around the whole process of like hiring teams and everything else, and, you know, whatever other lifestyle changes you have. So thank you very much for that. That was really great.
Can I just ask, Andrea, for the startup loans, you know, often founders have got to sign personal guarantees.
Correct.
And it's always, oh, do I have to sign it? What does it mean?
Yes.
For startup loans in particular, is it still a requirement?
Yes, unfortunately it is. But I would say it's not, what is the word? They don't come after you. They're not looking for a personal guarantee on your home or something like that.
Yeah.
Guarantee is around if this doesn't work out. So you work somewhere, or do you have a job somewhere?
Yeah.
Sometimes they don't. Sometimes people are on job seekers allowance and they're working their way through a startup loan. And what they do is they say, okay, let's look at what you were doing pre this startup. And if you had to go back to that, then what sort of levels of affordability would you be able to have if you were to return to that life beforehand? And so they won't overextend the credit to you. They will base it on that. And so the guarantee is about, look, we're going to give you this because we believe in you and your idea. If this doesn't work out, you should be believing in you and your idea. And when you return to normal life, that you will uphold the rules and repay this, because it's all about just getting the funds back in to reappropriate back out to the next group of founders. So that's what that guarantee. It's not like your normal bank guarantee.
Yeah.
You know, it's like, oh, what security do you have?
Yes.
It's slightly different. Yeah.
And I think it's an important thing, especially for our founders. Often they're at early stages, and people almost like, well, I don't want to apply because it's got this guarantee, and I don't understand. You know, there's a lot of conservative sort of decision making that then holds people back from even applying for the finance. So I just want to encourage anyone who's listening that you should never feel afraid. And if you do, you approach a platform of specialists like Swoop or Andrea or one of their team to actually understand more about it, to get more comfortable. But don't let that stop you, basically.
Yes, absolutely. No one's going to force you to do anything. You should just empower yourself to know your options. And the other thing that I was really passionate about when starting Swoop was around letting business owners know what it is that those providers are thinking about when they're looking at your profile. So too often it's been this kind of black box in terms of, oh, I got rejected for a loan. Why did I get rejected? And mostly it's because you should never have gone for it in the first place. So we showed back to our owners, hey, this is this metric that every underwriter looks at. It's called debt service coverage ratio. And this is what it means. And this is how we calculated it. And then it empowers businesses. And I think this is where female founders really have a bit of an edge. So as I mentioned before I started Swoop, I did this for a living. And I remember, and this is where the idea came from. I had two female founders started this amazing business called the London Film Academy. Still remember them. They still talk about me a lot. And when they had an amazing business. And I remember going in and saying, oh, like, what's your gross profit? What's your net? And they were like, oh, the bookkeeper's coming in on Thursday. And they were so compliant. I mean, like, oh my God, these guys were so disciplined. And I was like, but what, don't you feel and live and breathe those numbers? And they were like, no, we're really terrible accountants. We're real creatives and all the rest. So I built this little Excel spreadsheet and I said, this is your Fitbit for your business, right? And I know you're terrified, but this has to go this way by the time I get back here next week. And this has to go this way and whatever. Their business grew by 20% that year and their bottom line grew by 30%. And the reason was they felt empowered and they loved seeing those numbers and arrows going in different ways. So things like they got rid of the lease on their printer. They were doing all of these things. And as soon as they got into it, they were on fire. And that for me was kind of really cool. By taking away the stigma behind it, it empowered them to become really good at what they were doing. So that's one of the things I'm really keen on, is not to be intimidated by the numbers or those who are speaking numbers with you.
That's great. By the way, I just totally love the idea of Fitbit for your business. And I think it's a business. I think it's a new company. Because if I was able to actually wear a device that could tell me either how far I was or how I'm doing, or if I'm checking up and, you know, how much did I work on my company today, my investor deck, and have I done this and have I all the checkpoints, that would be amazing. Okay, I'm going to hand over now to Danica, who's going to ask another couple questions, and we'll take it from there. And Felicia will jump in, and, you know, it'll be all sort of conversational. Okay.
So I think the reason why a lot of people are going to click on this is because of Felicia and yourself, right? You're inspiring women who will encourage other women to think in a similar way to you. And as two women who run and own businesses in a time where it's challenging to work, it's challenging to live, and it's challenging to run a business. I mean, how transparent can you be about some of the most interesting challenges you faced in the last month? From a business sustainability standpoint, from a burnout of employee standpoint, what are just the biggest challenges that you've faced in your day-to-day? So maybe Felicia, I'll start with you, and then we can go to Andrea.
Well, I'm very interested when you talk, Andrea. From our perspective, the first thing that we did was review where we were and where we saw the environment going and the level of uncertainty. So McKinsey wrote a report, which I'm sure many people have seen, relating to it could be bad and it could be awful. There wasn't anything else. And then what to do as a business. And the first thing to do as a business, hence the topic of this, is to conserve cash. So under any scenario, you have to hold back your cash and decide what are your priorities. Obviously, besides taking care of clients, which is always a top priority, especially for a regulated firm, the next priority is obviously for me around employees. And then everyone else is probably, you know, a distant third. So decide whatever your priorities are. Maybe you don't have employees, you know, you're just a manufacturer or something, but base it on those. And then hold back on, you know, everything you can cut immediately. Like my view is I'm very much, you've got to face it, like front forward, you make the decisions, like feel the pain and just take it on the chin. You're going to have difficult conversations with employees, with creditors, with various suppliers. And but if you face it, you know, directly, then you get through it. If you put your head in the sand and think that it'll go away or fix itself, the problems will just accumulate. That's the nature of cash flow. is the problems will accumulate. So, you know, it's to hold back on every single outgoing payment that is non-critical until the market, this is my view, until the market settles. And my chairman, you know, he gave me a brilliant quote. He said, "No one wants to catch a falling knife. Wait till it lands, and then you make your decision about it." Because right now we're in the middle of so much like rapid change every day. Like Andrea mentioned, a number of small business initiatives, which the government announced only on Monday, which are not clear relating to the eligibility criteria yet. So what decisions do you make? How do you decide what you're going to invest in? How are you going to move forward? All of these things need to settle slightly. And in that interim period, you must find ways to conserve cash flow, whether it's using government, using your own resources, and all of that. That's the first thing. The second thing for me is around what can you maximize in the current environment. So it might be, obviously, if your business is a hotel, it's more of a struggle, but I've even seen a lot of that where hotels are housing banking staff and all sorts of things like that. But if your business has got some sort of value to add in the digital space, to look at how to provide that solution. And the third, which is probably the most important, is the communication. So it's number one, find your way to communicate with your team, however big or small. Like what has sprung out of all of this, which I've really loved, is like last night I had a dinner where we were invited to by Cameron McKenna, another shout out. They invited all the startups and provided dinner via Deliveroo. There were like 40 or 50 startups on this call with specialist lawyers provided by them, and we were all eating our Deliveroo dinner. There's this other company that delivers drinks nationwide. So you can use that, and then you can have a chat with your team, with your clients, with your partners. So those are my three things.
Yeah, I would completely concur with that. Cash is the first thing. Cut up every card you have. Stop them, because what appears after that is you'll start to get notices on all those subscriptions and whatever, and it'll say, oh, your card's gone, whatever, and then make that decision. Do you actually really need that? So literally, it's like a drop dead, stop everything, and it's the best way to do it, quickest way to do it. And other things to do is, and I find females, we usually try and take on more, and we're not as forthcoming with, I need a deal, or you need to cut this, or I can't pay you right now. We will try everything to try and pay that bill before we say, I can't pay you. And I say this with absolute deep experience, because this is my second crisis to go through as a female founder. I went through 2008, and oh my good God, it was painful. And I didn't make those decisions fast enough then. So I'm telling you this from pain. That is what you need to do, and you need to just take it on the chin, pick up the phone and say, because guess what? Everyone else is doing it. Everything from your insurance premiums. We have insurance providers as partners. They expect people to phone them and say, hey, I want a moratorium, or hey, I'm not paying this, or whatever. Same thing with landlords and suppliers, and they will only look at the ones who shout the most. Just be one of those that goes, sod it, I'm doing it, I'm getting in there, and I'm making these changes. Also use the time, I think, to really, really challenge yourself on your cost base, because I just find it's focused my mind so much. So that the question was around the challenges that we're facing as female founders. I think my challenge was in my first week of the crisis, I felt really uncomfortable. And I think the reason I felt really uncomfortable, and by the way, this is for us, our demand has gone up 700%. We have customers that would never have thought of a digital platform for finding funding. They would have gone to a bank manager. They are now our customers. So for us, we're one of those who bring value at this time. So I'm not going to complain on that side. What I found personally challenging as a founder was to put the mirror up to my face and say, yeah, it's easy when things are going well, because we've had a great run since we launched. It's been pretty insane. And so it was great to go, yeah, the world's not dandy anymore. You know, I might have cash right now, but my God, I thought I was going to go for my funding round in 2020. Yeah, that's not going to happen now. So suddenly I've got to make some hard choices. And looking at my business model, looking at our processes, are we as good as we think we are? And it was a very uncomfortable time. But I've since told everyone it's like a gift. I've seen this time as a gift, because boy, your business model needs to be refined and refined and refined if you're going to survive this. So I decided to reapproach it and see it as, this time out is the time where, rather than running around talking to lots of customers and doing lots of events, I can focus inward and make sure that we do have a really good operating machine going on. So I think you can turn that challenge around and use the discomfort that we're all feeling to make sure that you're building something better.
Right. So first of all, Danica is supposed to be moderating this part, but I just wanted to say one thing, is that this is really what you're talking about is resilience building. And whether it's personal or professional, whatever it is, it's learning basically, you know, whatever doesn't kill you makes you stronger, et cetera, et cetera. Or as my 10-year-old says, cry me a river. She goes, cry yourself a river, build a bridge, and get over it. Okay, so... So professionally, I think we need to adopt that attitude, but sorry to interject there. Just thought.
That's brilliant. I'm gonna steal that one. Yeah. I wanted to double click on something you said that I think might be revealing to a number of our members. So if we heard everything you said, so your business is doing super well, you're being as cost conscious as possible, your business is serving those in need right now, yet you are scared to fundraise this year. Mm-hmm. Like, make sense of that for us. Yep. Because there are a bunch of us within our community that are thinking, oh, okay, well, I have a service or a business that's doing okay right now. Maybe I'm primed to raise money this year.
Yeah, I think I wouldn't say scared. I'm reluctant. I need to survive this period of uncertainty longer. Why? Because valuations as a whole have absolutely taken a nosedive. Fintech valuations have taken a nosedive. What was an entrepreneur-friendly environment in Europe, which was something new and wonderful for us all to experience, we were actually getting somewhere in terms of that, is now an investor-friendly environment. And I don't even mean it's an investor-friendly one, because you know, uncertainty is not good for them either. So it's more around, I need the next time I go for a raise, there are two things I want to have happen. One is I want to prove, I want to be able to say, we were a young fintech and we not only survived, but we thrived during this period. And secondly, that in the macro environment, I'm in a position where we have options. I don't want it to be oh, thank you so much, I've got somebody who's willing to invest during this crazy time. So it's just more around trying to get to a more level playing field and a more stable macro environment. Yeah, I think that's kind of my reasoning in my head.
Makes sense. Felicia, do you have anything to add? Because I know that you're slightly similar.
So I would say it depends on your stage. So Swoop is obviously, you know, slightly late. Not that you're a later stage, Andrea, but later stage than, say, someone who maybe they're fundraising for the first time, or they're just topping up an angel round. So it is a case of where are you and what are you offering? Because there's still investors who will invest. It might mean what we've seen with investors who we've spoken to is they've typically said they're still investing. There will be a longer due diligence process because they want to review where you are and what your COVID-19 strategy is in much more detail. You know, if you haven't thought about it, then there's a big problem, you know, from the red flag from an investor. So there are many, both institutions and individuals who are still looking to invest. Not as many, like Andrea said, it's not as friendly. Valuations are obviously lower. But what we've got to consider is we're moving into a totally new normal economic environment. 2021 will be a dimension of pain we cannot even articulate. Like I would say across the board, you've probably had something like 20 to 25% job losses / earnings decreased across the board, with very, very few exceptions in terms of countries or economies. Like, I mean, aside from, you know, the UK, the US, Europe, are very resilient because we have large wealth built into our economies, large and long term. Other countries are not as resilient. So, you know, they can be set back decades. And I think we have to acknowledge that going forward, we don't know how are we going to recover from this? Because how can a government simply raise taxes for that recovery? I know I'm moving in another direction, but what I'm saying is, but business continues. And the whole concept of, you know, enterprise continues during this environment. So, you know, I've spoken to people who actually are founders of amazing healthcare businesses. You know, they provide you with a tool to speak to your elderly relatives who live in a care home. This is an American startup, Yael, you'll appreciate it. So you can see that this environment, like Andrew says, it's going to bring out the best in you, whether you're looking at your operations to be scalable, whether you're looking at an opportunity to grow because you provide unique solutions, and whatever it is. But enterprise will never stop.
Yeah, and I would actually agree with all of that. And actually, it's a good time to start a business, because we can talk about the downside, and we all know the downside, but some of the upsides are, if you're a young business, trying to get a decision out of incumbents is usually a very long process, 18 months, 2 years, 3 years, who the heck knows. Now it's suddenly a few days. If they think actually that's something that can solve something within our world, people are more open. People are changing their behaviors. And so if you're watching this where you're a startup and you are at a young enough stage where you can observe all of this and see, well, how can I map that into what I'm offering? You could actually have significant growth faster. So being a startup means you're not so far down the line that you've got like fixed costs, you've got a crazy burn rate going on, etc. You can kind of observe, make good decisions, and just be ready for that growth spurt. So I'd say actually now is a good time to start a business.
Yeah, and you've got no legacy costs, so you could really start. Yeah.
All right, so this is a really good point now to actually talk about the future. We've got about 15 minutes left or something. So it would be great, first of all, I'd just like to kind of cap off that discussion and mention the fact that innovation is always born at a time of crisis. Innovation rarely is born at a time, and it's just not only experience, this is kind of quite well known, is that if you think about globalization and over the past centuries of how we've moved from an industrial revolution to like the next thing, there's always usually a war or something that really creates this monumental shift, or a great financial crisis, and then everybody's got, you know, scorched earth and we've got to start again. And I speak about this a lot, actually. I'm doing a session next week on fundraising, and globalization has a lot to do with this, and it's really important that we understand that at these times of change, that's when innovation happens. You know, it doesn't happen when everybody's like really comfortable. It happens when we have to think of solutions. So I agree with both of you, but I think it's really important to call it out at this point. Okay. So now we are faced with a government, and we're kind of quite lucky, who is offering, lots and lots and lots of opportunities and initiatives for startups to flourish. And this is actually interesting because there's a book called The Entrepreneurial State, which discusses the role of government in funding startups. It was written quite a while ago, and I think it was after the GFC. And then suddenly, you know, you've got this kind of like merging, and mostly talking about America, but merging of the state and the startup, which is a very interesting dynamic in general. But more specifically, I want to get really drill down. The government has announced lots of different funds. Innovate UK for startups was announced on Monday. Future Fund. There's lots of tools for SMEs. And it would be great if both of you could just comment on these, and so we just get a real brief understanding of who's eligible for this stuff, and is it worth applying? Do we need special grant writers? Can we do it ourselves? I happen to be a grant writer, but I think it's really important that people understand you don't necessarily need one, or do you need one? So I'm going to hand over to both of you if you can comment on this, because there's so many opportunities now, and we need to know how, what, why, where, who.
Yeah. So yeah, as you mentioned, Future Fund and Innovate UK just announced. On the Future Fund side of things, it's more that the investor will, so the British Business Bank is intending on launching a platform, a digital platform, specifically for Future Fund. And so that is intended to go live apparently first week of May. And what that will entail is the investor themselves. So that the fund, just to give everyone a brief understanding, is the government has said, we've set 250 million aside, and we will invest that 250 million alongside private sector investors. And so we'll do it on a matched basis. And so let's say you found an investor or an investment fund, they have come to the decision that yes, they will proceed with an investment, and they're able to maybe look at that decision in light of having some of this matched funding to perhaps help with their risk appetite side of things. They will go to the platform and actually say, we're investing, here's our terms, etc., etc. Platform will say, yes, you are eligible for the matched funding, and then the government will invest up to 5 million per company as a convertible loan note. So it goes in as a loan, and if you can't repay it, it will convert into equity at the next round at a discount. So that's how that scheme will work. So you don't really have to worry about, oh, how do I get that money? It's more around finding your investor first, and that investor understanding the eligibility criteria. Now, we have about 500 funds on Swoop. We're going around talking to them all, saying, has this made a difference to you as a fund? And some of them are saying it will help tide them over during this period. It will help them be more comfortable proceeding with deals that perhaps they'd initially started to look at, were a little bit down the line with, but it kind of said halt to. So that's how that will run. The Innovate UK one is 750 million. The first 500 is set aside for already companies that are already clients of Innovate UK. So the 2,500 companies that have received something in the past will be the ones that can go and get top up via grant or loans. We're waiting for the exact details, but there will be a further 250 million set aside for new applicants. Now, what we're waiting to hear from Innovate UK, exactly to your point, Yael, is this going to be the same journey as you subject these poor companies to for a grant application, and how I'm really curious to see, and I'm hoping that Innovate UK have to create a specific version of this to react more quickly. And what they will learn is actually that system's better than what they do at the moment. Now, they've improved life incredibly over the years. I've known Innovate UK since they were TSB, and they have improved massively, but there's room to grow there. So I'm hoping this is an opportunity for them to distribute funding in an appropriate way faster. So that's to be confirmed, and I'm sure we can share it with the community once we have more details on it.
That would be great, because I think we want to try to include as many links as possible when we send it out.
Yes.
And we can send out further information. So it's not just a bunch of pretty faces. We also have some information to help you. Felicia, do you want to jump in here and give some
yeah, I wanted to add specifically for female founders, because generally, obviously, for Hive Founders and all of us, is we've also written to the various relevant lobbying organizations to make sure that they don't have some sort of unconscious bias against female founder businesses by having matched funding only with venture firms, because obviously women only get about female founder businesses only get around 4% of venture money. So it would be a total unconscious bias. And I feel if there had been a female founder representative in that whole discussion, Andrew, I'm sure that this problem, it would never have even come up. In addition to the high growth, because there's a lot, the devil is in the detail, which are not, there's like a high growth criteria. What is that? And again, female founded businesses do not typically have the high growth criteria because they're slightly earlier stage if you use revenue or profitability. But if you use valuation, which is the more typical startup, then they would fit. So there's certainly, we've written relating to that. And in particular, I also feel that, again, the government needs to be very aware of this unconscious bias. If you look at Innovate UK, their average awards and applications are only 15 to 20% through women in R&D. And it's not the fault of Innovate UK or the government, it's just a natural societal occurrence. And the government should also be aware of that to ensure that they don't unintentionally land up with that creating more bias by awarding it to people who naturally are not women in R&D. Mm-hmm. So for me, there should be wider coverage. And I agree with you, Andrea. The Innovate UK launched a very quick grant process recently under Business Resilience COVID-19, okay, which was like 4 questions.
Yeah,
so hopefully
totally on Innovate UK. Yeah.
And anyone, again, who's watching, I would strongly recommend that you go and put some sort of Google alert on for Innovate UK, or I don't know if Swoop provides some sort of update.
Yeah, you can, we do updates as well, but you can also go register and just register your profile so that they will alert you when things come up. Yeah. So, I agree with all of that. However, I will say, I think during this period, we will see a good light shining on female founders, because I think a lot of female founder businesses will survive and thrive. And I think we should also do a big shout out to Alice and Rose, because RBS are by far and away the best bank at distributing the CBIL scheme since it came in. They are actually responsible for over 70% of all loans distributed so far.
Wow.
So I just think that's great. I think it's
amazing.
Great that she set out her purpose when she took the role, and she's living by that, and RBS are living by that already. She only had the job, and she's so I think there's some pretty cool things that are going to come out of this time that will shine a good light on female founder businesses.
I would agree with you there. Felicia, I just wanted to go back to your point for a minute before I hand over to Danica, which I know the question about bias you raised on Twitter with Emma Sinclair as well. We were discussing it, and then you actually posed a real interesting question. What would have this have been the case if it would have been all women? And I don't know the answer to that because we don't have that scenario, but just if you could just give like 1 minute of your thoughts on that, because it's a really provocative question, because it speaks to the point of discrimination and what is discrimination, and are we talking about equality, or are we talking about kind of just getting angry at the fact that there's only men? And you understand my point.
Yeah, so I feel very strongly this is actually not an active discrimination scenario. This is my view. I think that it's a societal bias, in the same way that there are very few statues of women, other than the nymphets, which I won't count, in the same way that women are as likely to interrupt other women speaking as men are to interrupt women speaking. So you can see it's nothing to do with men and women. It's to do with the way society has been constructed. So when you have a problem that's that complex, you really can't oversimplify the solution by saying, well, let's just have a tick box exercise or some sort of PR. And I feel that working together more collaboratively around a solution, representing people who are in a minority, whether it's female founders or whether you're, Black Asian founders, you know, for me, that's what's very important, being able to support, uplift, and encourage. So they, you know, you take away the fear, the risk, the concerns around, I don't know, can I do a personal guarantee, and equip people with all of those tools, which, you know, build resilience. I really think it's a very big collaboration. What do you think,
Yeah, I think the next phase we're about to go through is going to really be the positive impact that female leaders and founders can make. If you already look at the conversations going on in terms of even if you take fossil fuels and we talk about sustainability, or, you know, emerging from this with making different decisions and capital making different decisions. This is the key here, is where will the capital move to? And so if they're moving because they know economically that's the best thing to do, and they shift away from the traditional industries, and they move genuinely towards this is where we need to go now. If you actually look at the stats of business leaders of sustainability projects, sustainable businesses, where the funds are coming from, mostly there's more of a majority of females. And this is because we're just different. And one of the things we have is empathy. And so therefore, when you are looking at sectors which require this great levels of empathy that we have, you will find female leaders leading those areas. And I think what we will see is this, we're all having this state of internal reflection and saying, okay, more of the same is not going to work when this is all over. And that's happening at government levels and capital levels and whatever. So I think out of this will emerge the moment where there will be this societal shift. Not because we've all said it's good to support female founders, but because naturally the capital will be flowing to businesses that female founders have already been leading or are attracted to. So I'm quite hopeful for this next phase of, I agree. I'm actually happy to say I've never suffered discrimination. In my whole time, I've worked in large engineering organizations. You know, I used to work with all the companies spinning out of a Formula One team. I'd be the only woman in the room, but I never felt discriminated against. So I know that's not the case for everyone. But so I've never, I think I have what's like Harvard Business Review call it gender blindness. But I feel the same. I don't feel as male versus female in this discriminatory way. I think it is this societal shift. And I think it's about to emerge in a natural way, in the numbers that we needed to be impactful.
So we have time just for one more. And I think that something that I think we as a team and our founders have been challenged with is, you know, how to come up with a voice that's completely virtual. So, you know, we talk about this all the time, and that there's so many ways to reach out to customers. There's so many ways to reach out through all these various channels, some physical, some, you know, talking to your investors in person, to curate who you are as a business, as a person, as an individual. And now all of that has shrunk to almost one way of communicating. And I think the last question for you is, there's so much noise in sort of the virtual world. And I guess you have competitors, all of us have different forms of competition in our life. How are you thinking of, you know, standing out in such a crowded field, just from a voice standpoint? I think that would be very interesting insight.
Yeah. Well, from my perspective, I do have competitors and very loud ones too. So yeah, it's a challenge every day. It's like, oh God, okay. For me though, it comes back to, I only say something when it's actually of value and when it's a genuine opinion that I hold. And so there's nothing appearing on any of our channels that is just a blah, blah, you know, oh, better create noise to draw attention to us. I'm really passionate about what I'm doing. I mean, the point is, I didn't start this by going, there's a shift in technology, there's a shift, and I'm going to start a fintech. It was like, God, this issue is so ridiculous. I need to solve it. So I think being just true to the why did I start this, and what am I passionate about? Is it the next great widget on the platform? No, only if it's something like a Fitbit that helps people go, this isn't so difficult after all. So I think just sticking to who you are and not being worried about if you see lots of noise out there, I think it cuts through. And I think, like Felicia, I'm a bit opinionated and what you find is a lot of people are drawn to opinions because they're trying to navigate through this, like all this noise, and just trying to simplify it and say, here's why this is good, or here's why this isn't so great, or this is terrible, or whatever, has been helpful in terms of creating that sort of virtual, that's a great way of putting it, virtual persona. I've never thought of it like that. Yeah. So that's what we do. I also quite like this. I think we're all more human, weirdly, in this weird way, because we only meet now and you're on a board meeting or whatever it is, and suddenly it's like, oh, I was on a board meeting call. I'm a non-exec on this board, and the guy who I thought is the really sort of the stern, really traditional guy, he was in this tiny little box room on the call, and he was going, oh, my grandchildren are downstairs and there's something else going on, and I was told to come up here. And I was like, that is the fun. I never imagined seeing that person in that light, and it was really wonderful. It was so human. And I think that's kind of ironically the great thing about this is you're seeing more of the human side of people, rather than us being all business like and showing up and in WeWork and looking cool or whatever it is. Like, no, we're all at home. The dog's barking in the background. So I'm really comfortable with it.
So Andrea, first of all, I just want to thank you on behalf of Hive Founders and all of us here for taking the time to do this with us and being in discussion with Felicia. And thank you, Felicia, so much. We never, ever take you for granted, ever. And she's laughing silently. I love that.
Of course.
Okay.
To Felicia.
I don't take you guys for granted either.
Okay. And I want to just bring out a few points, just highlight a few things that both of you have said. Andrea, I love what you talked about just right now. Humans are weird. They are weird. We are weird. And we are opinionated. And right now we are seeking a lot of direction and leadership. And now is an excellent time for all the good reasons you mentioned, women having natural leadership skills, natural empathy, good communication skills, being human, being weird. All of these reasons give us as we're discussing right now, I love that word, a virtual persona, which we can overcome a lot of these obstacles that normally we would think, well, this has nothing to do with us right now. But yeah, right now it does. Everything from the background you see behind me to the human element of it to sort of communicating, this has to do with fundraising. It has to do with your product. It has to do with selling. Everything is about selling, by the way, I'm just convinced. And I would recommend a book that I read many years ago, was recommended to me actually by a senior partner of Freshwaters, called Challenger Sale. And it really is about different types of salespeople in a high economy and a low economy. And I won't spoil it for you or even save you 2 hours of your life. Go read it yourself. But it's very much about how we challenge investors and fundraisers, funders, about the future. So it's very much like as if we're living in a TED Talk right now, and we're actually asking ourselves, and we're asking our companies and our employees and our investors, and we're saying, what will the future be like? And so it's really up to us. What will the future be like? And so in those moments at 3 a.m. where you are totally bored, that's when I am totally bored. And the only time I have time by myself, we didn't even get to that, the free time, I do think about speaking to investors of the future, whether they're going to be scared, whether they're going to be, and that really has to do very much, like you said, about believing in our story, believing in our product, and, having solutions that people can believe in. And that really is leadership, right? That's the way I would summarize leadership. And as we have now on the internet, a very carefully curated life where, we can look the way we want and then also expose ourselves and expose our lifestyles, like Malcolm Gladwell's Blink, You said, I don't know if you saw Matt Hancock's little room, but everybody's talking about his color paint choice. But we can be more personal and we can be effective and grow sustainably. So again, thank you all very much. We're going to make this available to everybody. Felicia's constantly laughing at me, which I consider a very, very big
I
compliment.
was waiting for the Miss Maisel jokes.
Yeah, well, I thought Cry Me a River was quite good. Okay. But we'll get to the Mrs. Maisel jokes when we discuss how to cope with homeschooling. That'll be in our next installment. So stay tuned, everybody. Thank you very much. And we're going to sign off. Thanks to Nika and Magda.